Great. So thanks, Andrew. It's a real privilege for me to be here today among all of you leaders in the impact investment space in Australia. Thanks for the opportunity to share some of my knowledge and also to participate in the discussion later on today. Today we really want to focus on the next steps in Australia in building a social marketplace. And before we sort of start looking at the literature, I'm just going to reflect on the definition of social impact investment that comes from the Impact Australia report that I'm sure you've all read, where the definitional debate around these things remains quite lively, but we're going to work today with the following definition, where impact investment is placing capital and capacity to create both the positive social, cultural and environmental benefit and some measure of financial return. So when we refer to social today, we of course refer to social, environmental and cultural benefits. So today we are focusing on the next steps for building a marketplace, and we've structured that our session today around that. We're going to take a really short overview of the content of our Knowledge Connect, and then we've left some time for questions. Following that, Sandy's going to facilitate a roundtable discussion and really get your thoughts on what we can do next. So we've prepared Knowledge Connect today to introduce you to some of the latest ideas in social impact investment, but we really want to take the opportunity to have a meaningful discussion. So to do that, we've looked at a variety of resources to get a number of perspectives on these issues. They come from different jurisdictions from Australia and also some relatively more developed markets overseas and different types of reports, but we have concentrated on more recent articles. There are copies of all of them circulating on the tables if you wanted to look in any more detail at them. So the breadth and sophistication of literature on social impact investment has really increased in the last couple of years, and there is so much in those reports that can really help us to build our marketplace. But today we're going to concentrate on three themes that sort of came through our reading in the literature review. The first one looks at celebrating the diversity of actors in a social marketplace, how we can bring new ones in and how we can exploit the strengths of the ones that are in there. And this is really linked to the idea of building scale and sustainability in the social marketplace. Secondly, and almost as a counterpoint, when we have a wide variety of actors in a space with differing levels of interests and power, we can see that the mission can drift or become a little bit confused. So we've also found another key theme is some reports that look at ways to overcome barriers in the space that maintain a careful focus on social purpose and meeting the needs of social purpose organisations. And finally, we want to look at the diverse roles of the investor, where it's not just an individual or an organisation placing capital, but they play an active role in building the infrastructure and really contributing to the idea of a marketplace. So the first report we've got comes from the UK, the Cabinet Office, where they look at the role of philanthropy. Here they focus on foundations, but I'll use philanthropy, in a social marketplace to leverage commercial capital. And there are two advantages of doing this. First of all, we can achieve scale. We can achieve scale that's not possible with philanthropy alone, and that can allow us to invest in programs and broader platforms rather than individual enterprises or multiple enterprises. Secondly, they allow us to attract skills, networks, expertise, and just broader experience from the commercial world. And they sort of model three funds that they call commingled funds that blend social and commercial capital. The first one's pari passu, where all investors are all on the same terms. The social investors often provide a cornerstone investment in a fund. So it's a relatively simple structure. Secondly are the risk-reward funds, where social investors take a higher risk to achieve a social purpose and expect a higher return. And this creates a lower risk for commercial investors to enter into the fund. The final one is the but-for funds, which seem a little bit counterintuitive, but they involve the social investor taking a higher risk, low return position to create the environment that's conducive for commercial capital to enter into a fund. And these are often linked to very large-scale programs like global health funding initiatives. So the aim here is to achieve impact at scale. So the next report comes also from the UK, from Clearly So and New Philanthropy Capital, and they look at building the pipeline of investees and introducing new actors as investees into the market by focusing on investment readiness. There are two things that I found quite interesting in this report. It's very detailed, and I encourage you to look at it if you're interested. First of all, it provides us a depth of experience from a relatively more developed market. There are perspectives in there from organisations that have received capital. There are perspectives from those that are in the process of applying for capital and talks about their challenges in that process. And they've also got perspectives from organisations that don't have social finance but are interested, and importantly those that don't have social finance and are not interested, and why, and what the barriers are to them entering into that marketplace. The second really interesting point about this article is that it focuses on the tensions between the actors. Rather than just representing their perspectives, it focuses on the mismatches and the tensions between them all in the one marketplace. So for example, they've identified three sources and a number of tensions in them, but the first example is perceptions of skills and attributes required for investment readiness varying between investees and investors. And this can include things around differences around the ability of an enterprise to create revenue, what skills they require, and also the importance of social impact. And they've documented a series of really vast differences between investees and investors. Secondly, they look at the mismatch between the availability of support and what's required for investment readiness. They find that information is relatively fragmented, which leads to a lot of enterprises applying for finance too early and effectively sort of wasting time on both the supply and the demand sides of the market. And then finally, mismatches between access to support and the organisation's ability to draw upon it. And here they say that potential demand for capital is hidden rather than weak, and it's up to the intermediaries and the support organisations to uncover and unearth that demand rather than assuming that it's not there because they can't see it yet. So this again, it comes from the UK, and it reflects well onto our next report, which is from Ingrid Burkett, who's Australian, and she looks at, it's a report that looks in general at underserved markets in Australia, and half of it looks at social enterprise and whether or not they're financially excluded. And interestingly, she argues that social enterprises are not actually underserved in a financial sense in Australia, but rather that they're one-dimensionally overserviced by one type of finance, which is grants. So she, in again, a very detailed report, sort of provides a timeline for the different phases of a social enterprise life, and then matches that to the different types of capital needs that are required across its lifespan. And she argues for coherent and purposeful entry points and pathways to different types of capital. And so here she's identified two main groups for intermediation: development and investment readiness intermediation and social finance, and then talks in detail about how different organisations can transition between the two. She focuses a lot on intermediaries and the important role of intermediaries. Again, that's some of the key gaps that she's identified in Australia for financial intermediaries. I'm not going to go through them all in detail, but they are in the report. I think it's important to note that she concludes on talking about the very important role of intermediaries to support social purpose in the social marketplace, to ensure that capital isn't pushed into something without intent or care. And I think that's a really important part of that second theme that we talked about, the idea of making sure that the social purpose is preserved in a social marketplace. Again, that's reflected in the final article here, which is not so recent, and it doesn't actually relate to impact investment, but I think it's a really helpful perspective. Social impact accounting is a common refrain. It's widely considered a real limitation to the development of the social marketplace. And we have seen the development of standardised metrics approaches like the IRIS that are coming out to support the social finance marketplace, but they are driven by the needs of funders and donors. And this article provides a helpful counterpoint to that by looking at what the reality of social purpose organisations are, and tries to match that to how they should be reporting on that, on their performance. So they look at it across two dimensions, and they classify organisations as either having a complex or a focused theory of change and a complex or focused operational strategy. And they argue that the level of reporting, the sophistication and the focus of reporting should match the level and complexity of their theory of change and operational strategy. So, for example, a relatively focused organisation has a simple theory of change and simple organisational strategy, should just focus on inputs, activities and outputs, whereas impact should be considered by organisations that have a complex theory of change and have a very complex way of going about creating that change. So I think it's an overall framework that allows for diversity but really resonates with the social and economic reality of social purpose organisations. So that's the end of the second theme, and Sandy's going to talk to you about the next theme.
So I want to say a particular thank you to Sarah, because she actually did the review to find the articles and the books that we should be reviewing. So I was asked to look at 3 and really enjoyed, because often when you're so busy doing the you don't take enough time to read. So it was one of those moments where CSI phoned up and said, right, we need this by Monday. I think that was, Thursday or something, and Sarah and I both went, and started reading the articles and writing the summaries. Is what you've got in front of you, is a 500 to 1,000 word summary on each of the articles that we looked at. So I got through the first 2, it was fascinating, I really enjoyed it. Got to the 3rd, it was so boring, I didn't want to inflict it on you, so that's not in there, we cut it out. So you'll see there's 2 that I've reviewed, and the 3rd I spared you.
What was the 3rd, Sandy? I'm intrigued.
No one in the room wrote it. Tragically, it was about Asia. I'm not going to say who wrote it, but they didn't do much of a job. Anyway, I'll talk to you that offline, because this is being recorded, so if I name names, it'll be trouble. But what was very interesting for me in the 2 articles I did like was this first one talking about the players. What are the roles of the players, and how do they vary when you compare this market to a traditional market? And one of the ways in which they're distinguished are that the players have really complex roles. And so in a traditional market, you've got, what the fund manager's got to do, what the investor's got to do, and structure and so on. And it's all fairly straightforward. And it has its own complexities, but everyone understands their role. But when you look at this market, it's much more complicated, because the investors can play 6 or 7 roles. And the article draws that out. But the fund manager is not just a straight fund manager. They may also be a bit akin to a foundation manager and a coach and so on. So there's multiple roles that need to be played, because this is such a new sphere of work, but also because the outcomes we're trying to create in this marketplace are also more complex, and they have many dimensions. So it was a fascinating piece for me, and particularly around the role of what they've talked of as the active investor, who is kind of the magician in the whole piece, I think. So you need, financial structuring innovation, you need innovation in the funds themselves, you need all these things, but none of it will work without what they refer to as this active investor. And the active investor could be a philanthropist, it could be government, it could be a corporate foundation, it could be anything, but that person who sees their role as being someone who's willing to take risk, someone who's willing to coach a particular enterprise or an entity, someone who's willing to create a market, someone who's willing to do a variety of things in order to get this up. And it occurred to me that I sometimes can get stuck a little bit in the deal, because I've spent so much time doing the social impact bonds and various other prototypes that we've been doing in the last few years. I can be thinking about the deal as opposed to not thinking enough about the ecosystem. So I kind of think about the big picture of what I'm hoping we will all achieve in our work together, and I'm thinking about particular things that we're prototyping, putting out there. But this was encouraging me to think about the ecosystem, as was the second article. But the role of the active investor in creating this ecosystem, I think, is important. And I feel like we may need to be recruiting active investors more actively, in fact, and talking to people about the nature of the role and how it is very different. Because we're seeing a lot of commercial investors come in and going, okay, I want at least a market return, and I want this, and I want this, and I want this. And you could say that's great. And maybe 1 deal in 10 can deliver what it is that you're looking for. But other than that, we're going to need investors who are willing to do some of the hard yards to get the market up, and to have 6 or 7 different hats on. And it is quite an ask, but I don't think unless we articulate it that people can see both the challenge in that, but also the opportunity in that of being a market maker, and that you can play these roles. And the same thing I think is true for the fund manager. And if you're looking for a fund manager who can also be someone who is essentially managing a foundation at the same time, that's a really difficult gig, and it's one that most of our fund managers that currently exist couldn't do. And our foundation managers, very few of them, except perhaps one person in the room, who has a very strong commercial background, couldn't do a foundation manager role and a fund manager role simultaneously. So there's some new breeds of players that we need to be nurturing, but we need to brief it up in terms of what it is we're looking for and help people step into that and grow into those roles. So whether it's the active investor or whether it's the fund manager, help them to imagine what that role would be like and work together to make sure that people are able to play those roles. So they talked about in this article various different dynamics that were distinguishing this social market from a traditional market, but those are the ones that really stood out for me. The other ones we know around innovative platforms and things like that. And you'll see that that article was in fact the longest, because we were supposed to stick much closer, Sarah, weren't we? My fault, to 500 words, but I think that was like 1,200. But when you've got 6 things to cover, it just takes more time. So you'll see the various elements that were drawn out in those. But those were the 2 that really captured my attention and thinking I need to do more work in that area. And that explains the same piece. The second article was talking about the ecosystem, but the interrelationship between various elements of it. But the idea of investors creating the market into which enterprises will play. Because again, if you get stuck at the deal stage, and even if you're doing, are these social enterprises investor ready, and we're doing all this capacity building with them, there's that piece, but there's also the idea of what's the market into which these enterprises land. So where are they going to be trading their goods and services, and does that market exist? And we can't be just funding the enterprise alone and hoping that they somehow develop a marketplace into which they trade, but how do we help them do that? And so thinking again more broadly about our role as whether it's a fund manager or an investor or government or whatever it might be, but the environment into which these entities are trading and helping to create an environment that's conducive to that trade. So they spoke about 3 particular things that were interesting. So you've got entities, and they're all roles for social enterprises and not-for-profits, but the first one where you would be taking a new concept and essentially de-risking it by testing it out in the market. And you need the kind of capital that's going to take the risk on that. So they gave a few examples from around the world, which I've listed in the summary, where people are trying something completely new, putting it out there, seeing if it works, and basically de-risking it for the next entity. So if you can imagine another organisation that comes along and seeing that something's worked quite well, but what they need to be able to do and what they're perhaps good at compared to the initial innovator is scaling it up. So it's a bit like that founder piece where you've got someone who found something and they're very good at taking an idea and making it a reality, but they may not be good in terms of maintaining the discipline of then rolling that out over time. So it's as if another entity needs to step in and then scale it up. And what they were saying is you often find investment for the scaling up type of enterprise and type of work, but you rarely find enough investment for the de-risking of the product in the first place, the prototyping of a new innovation. And so the article was encouraging a lot more of risk-taking by active investors in helping people take these fresh ideas and putting them in the marketplace and getting them up. So you've got to have a high risk tolerance to do that, kind of a venture capital or social venture capital risk tolerance to do that, but it's absolutely critical to building a broader market to do that de-risking with these new innovative ideas. And then obviously the importance of scaling, but we're seeing more investment in that scaling piece. And the third piece I thought was interesting that they talked about as well was when you do start to have a marketplace of a sort beginning to emerge, you need these common entities, and we might call them traditionally industry associations and things like that, that take the interests of a number of players and negotiate them at a group level. And they were saying in the article that these are generally not-for-profit type associations, but incredibly important to growing a marketplace. But these also need investment. And equally as we're not seeing investment in the de-risking process of new innovations, we're also not seeing investment in these kind of industry associations which will help that market grow. So I thought they made some very interesting points about the ecosystem. And they talked about a number of other things as well, but those were the things that stood out for me in that article. So both fascinating, both worth a read. And also I think for me as a practitioner, helping me to think about where I'm putting my energy and how I'm spreading my energy out between these various elements and not just thinking about a single thing or a single issue, in the light of a common goal that we want to share. So I thought given what Sarah and I both pointed out, we didn't want to go into too much detail. There's more to read. There's obviously the articles themselves to read. But we thought it might be interesting to have just an over lunch. I don't know if everyone's eaten, I certainly haven't. But an over lunch conversation about, given some of this, what are the next steps for us in Australia? Because people in the room, and there's probably this many of us again who couldn't make it today, are really driving the market here, and we're kind of the central players in all of this. But we don't often get together and work out together what we'll do. We tend to meet in 2s and 3s and have conversations about what we're up to and learn from each other. But there's an opportunity around the table today to say, okay, as a group of influencers, what do we collectively need to be thinking about, and what are the neglected areas? How can we improve our practice? But how do we collaborate and be clear around how we create that ecosystem in Australia with all its challenges? And there are certainly lessons to learn from overseas, but we're really clear it's a very different market here. One of the main differences, I think, is size. So we lack the supportive government environment. We've got examples of good practice of government support, but we don't have that across the board that you've got much more in the UK. We don't have the volume of philanthropic support and leadership that you've got in the US, say, and we don't have the volume of market that you do in Asia. But we do have a lot to work with here in Australia, so it is quite unique. But we thought it would be worth having a roundtable discussion over the balance, and we'll just lead that from sitting next to you, about what are the next steps we need to be taking and what things should we be considering together as a group of influencers in this area. So we'll open for some questions, but I think we'll also take that from the floor, from the table, and then we'll just lead off in a discussion around next steps for us all. Thanks very much, and thanks for coming.